Happy Thursday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Thursday, February 29th, 2024. It'll be the last time I get to say that for a while. So happy leap year to everybody who participates. So today's key macro event is the PCE report supports the no landing scenario, and the BLJ inches closer to liftoff. So the nuance there, as predicted, hawkish consensus forecasts and the dramatic repricing of the medium-term policy rate outlook de-risked what was otherwise a hot January PC report. The data demonstrably increased the probability of the no landing scenario at the expense of the soft landing scenario and supports our prior expectation that a no landing will overtake a soft landing as the consensus expectation among market participants in 1 to 2 quarters. Elsewhere, BOJ board member Hajime Takada signaled the case for ending NERP with the first rate hike since 2007 is gaining momentum in Japan. So in terms of market implications, how we see the sort of U.S. Business cycle playing out in market regime terms is Goldilocks, the current market regime, was likely transition to risk-on reflation, followed by a transition to risk-off inflation. How long Goldilocks persists primarily depends on how productivity growth evolves with the upcoming release dates on May 2nd, August 1st, and November 11th. How long reflation persists primarily depends on how long immaculate disinflation persists. The upcoming PCE report release dates are on the March 29th, April 26th, May 31st, June 28th, July 26th, August 30th, and September 27th. When inflation rears its ugly head largely depends on when the Fed and/or Treasury are forced into a less favorable policy mix by the likely transition from immaculate disinflation to sticky inflation. The key dates there are March 20th of the FOMC. You have the QRA Part 1 on April 29th, QRA Part 2, Q2 QRA Part 2 on May 1st. May 1st also is the FOMC as well. You got FOMC on June 12th. You got on July 29th, you got QRA Part 1. On July 31st, you got the QRA Part 2 in terms of Q3 QRA, and as well as an FOMC, followed by an FOMC in September 18th. So in our opinion, all the dates we just listed are the most important macroeconomic catalyst dates between now and let's call it the end of September. That'll help us understand, that'll give us the confidence that we need to start anticipating the market regime phase transitions that we highlighted above. Elsewhere, we continue the BOJ's April 26th meeting. We continue to view the BOJ's April 26th meeting as the most likely catalyst for liftoff. Refer to our December 19th, January 10th, January 19th, February 6th, and February 27th lead off morning notes for more details regarding our outlook for the Japanese economy and BOJ policy normalization. So a lot coming at you this way, but there's always going to be a lot coming at you when the PCE report is released. It is by far the most important data point we get out of the U.S. economy each month. So transitioning to my 42 macro dashboard. We'll start with the trading range signals from our friends over at Longbow, getting an overbought signal here in the Russell 2000 or near overbought signals. So be aware of that if you're long small caps, maybe lighten up and if you're trying to get allocated to small caps, maybe slow your dollar cost averaging process down a bit. In terms of oversold signals here in the 10-year nominal TIPS yield, starting to make a series of higher lows. So be aware of that. So near oversold signal in the 10-year. Sorry, this is the 10-year TIPS yield. The previous chart was the 10-year nominal Treasury yield. Both are making higher lows. And then we continue to see an overbought signal in Bitcoin, but that's not going to stop this thing from rallying. If anything, you're just probably, if you're dollar cost averaging, think about dollar cost averaging slow in the context of a raging bull market. So transitioning to our 42 macro community, wrapping up with a question as always. The question reads, what happens after Bitcoin makes a new all-time high or closes at its highest monthly close? The ETF in theory would really sell, or could it stay elevated? If we had a pullback, where would it take us? What are the first few support resistance bands? I know we have Longbow, as we just highlighted, but we have this user has its own trading range view for crypto exchanges and wants to sharpen iron with iron. So the key takeaway is here: if we take out the all-time highs, there's no resistance. So people are just going to be able to speculate wildly on what the ultimate price is, and you're going to start to hear people throw out lofty price targets like 100,000. I guarantee the top of the cycle is probably going to be when someone puts out a 250,000 price target. That's what you're going to start to hear as this bull market evolves. But it doesn't necessarily mean it has to evolve in a linear straight line. As we mentioned, we could be in a crypto bull market for the next 1-2 years in the context of the halving cycle. but that doesn't necessarily mean that Bitcoin has to go straight up every day or straight up every week, month, quarter, etc. If we transition to a risk-off market regime in the second half of the year or sometime before that, we would expect Bitcoin and other Bitcoin and other cryptocurrency assets to have a significant correction. The consolidation. When crypto consolidates, it hurts if you're max long those positions. So be aware of that. So in terms of the support levels that we've identified in terms of our technical analysis here, the first layer supports at around 52,500. The second layer of support is at 44,000. And then the third layer supports right around 40,000. So again, I highly doubt we get to 44,000 or 40,000. But if we did pull back and had a sharp pullback, we could see 52,500 before we consolidate and start to move higher. But again, we're not in the business of predicting the predictors. We are in the business of identifying what the market regime is and using our macro weather model and fundamental research to anticipate what the next market regime is likely going to be and when it's likely going to change into the next market regime. That's if you're just consistently doing that process over and over and over and over and over again, you're going to keep yourself on the right side of market risk. Are you going to have, some sexy thesis proven right? Could you have a sexy thesis proven right? Perhaps, but the reality is we're not in the business of having our sexy investment thesis proven out. We're in the business of helping clients make and save money. And that, in our opinion, is much more important than being proven right on a thesis. So in our opinion, so we wrap it up there. Darius Dale presenting our macro minute for leap year 2024. Everyone have a wonderful day. Best of luck out there. We'll catch you back here tomorrow. Cheers.